So since the excitement of last week's breakout, crypto realized vol has stabilized. Now we've seen 10-day realized kind of flatlining around the higher level that it jumped up to. But the reality is, if we go to 5-day or 7-day that doesn't capture that big 10% move last week, then actually realized vol has collapsed all the way back to the 40s. So it is looking a bit more normal from what we were seeing previously before the explosion higher. Implied vol has drifted lower, but it hasn't completely collapsed. You can see that in these green and white lines here. Basically, the usual kind of gamma sellers, waiting for markets to stabilize and then coming and smashing vol down really quickly. As I suspected, that has taken a bit of a breather. So we saw vol kind of go up to here in terms of implieds. It had a little dip, but it's right back there in the kind of 50s. And we think it's going to take a little bit of time for the vol selling to really come back in full force. We have got some macro catalysts this week, like FOMC, non-farm payrolls, but we are seeing a decoupling of crypto markets from other risk assets. And actually, that is a factor, that decorrelation that we're seeing between crypto markets and risk assets strengthens the case for more institutional adoption once the ETFs become available, because you get a diversification benefit from owning some crypto. You don't need a lot of it, and the track record of returns historically shows that not only does it give you diversification, it gives you returns as well, right? So a bit of a no-brainer for once it becomes an available product to trade for a lot of these instos, bit of a no-brainer for them to allocate some capital into that. And we suspect that will be the case. Okay, so that's the kind of deal with realized vol. The carry numbers are showing negative, but if you look at it on a shorter term time frame, they are more flipped back to small positive. And I think they'll need to stay there for a while before the gamma sellers really come in. Okay, that's realized. Now let's look at the term structure. And what we're seeing here in term structure is a move back towards contango, the front end kind of moving down in Bitcoin. Quite decent moves down, like 7 to 10 vols in the absolute front end on Bitcoin, which had got really elevated. The medium term stuff down more like 3 or 4 vols, and the back end's down about 1.5 vols. So that's kind of what we're seeing in Bitcoin. In terms of Ethereum, front end did come off its highs, but we are actually seeing an uplift in kind of 1 month onwards vol. So that sort of December area, March area is actually up. So seeing a bit of a move there. And that's coming from some short covering flow that's been going on in the market that we'll discuss. But in general, Ethereum midterm vol is outperforming Bitcoin. The whole Bitcoin curve shifting down into contango with the front end getting hit the hardest, and the Ethereum curve kind of pivoting with the front end coming down, but the back end actually quite stable. So that's what we're seeing in term structure. Looking at the Ethereum Bitcoin spread, that obviously reached extremes, right, near sort of 8 to 10 vols Bitcoin over on the explosion higher. That has reverted pretty massively here because Bitcoin's come down harder than Ethereum. So you see that jump back up in this surface where now the spread is about 3 or 4 vols, maybe out to around 6 vols in the 90-day bucket where Bitcoin's still holding a premium. But that is quite a decent move back in the vol spread. So the vol spread kind of overshot to levels that really, we'd never seen before. And it is kind of mean reverting back a bit, but it's mean reverting by virtue of Bitcoin vol coming down and Ethereum vol holding much better. And now the realized vol spread obviously went pretty nuts. 10-day went to like 25 Bitcoin over. The 30-day is more like 8 or 9, which is a bit more consistent with where we got to. But we do think this move in the vol spread is kind of the option market realizing now that a lot of this ETF news is priced into Bitcoin, and the market's focus may now need to shift towards alts and Ethereum and where the value is, basically. So whilst we might get a push to 38 to 40K on Bitcoin, the question now becomes how much does ETH re-rate on that type of move? If we get the confirmation of the ETF, we get Bitcoin push on a little bit more, what happens to Ethereum? The ETH Bitcoin cross rate has hit a major low. We'll see if it actually is a low or it breaks down below that low. But if it holds that level, the idea is that a rally in Bitcoin probably brings are bouncing that spread as well, and Ethereum actually starts to outperform on the upside, something we have not seen all year. But if that starts to happen, that in itself can become a story and can start to build some momentum. And before you know it, you might see ETH outperform by 10 to 20%. And that was the sort of moves that were easily doable back in the day before this kind of whole Bitcoin dominance really kicked in this year. So that is something I'm looking out for. Dealer positioning does look like it has been keeping Ethereum from participating in the rally, but we think we have started to see shorts being covered in November in the money calls, which are overwriters licking their wounds, taking their loss on short calls. And that's probably going to lead to them rethinking their strategy. The margin requirements have gone up against these short positions as well, which might mean they need to downsize the amount of vol selling that they do. And if that is the case, then that means the market's not going to be overwhelmed with so much Vega supply in Ethereum that it has done. And that is going to change the dynamic. And that might be what Ethereum needs to go back to a world where it is the higher beta asset. It has not been the higher beta asset for most of this year. And I don't think it's dead in the water. I think it's coming back. It's just a question of when it comes back and how that plays out. Okay, so that's what I'm thinking in terms of the relative value between ETH and Bitcoin Vol. Now let's kind of close out this Vol section with SKEW. So BTC SKEW was extremely volatile last week, right? We had the initial explosion higher in spot. That led to profit taking in calls, people monetizing calls, and that made the call SKEW flatten because puts got bought, calls kind of came back down, and we got to almost flat in the SKEW, even though spot was breaking higher. And we mentioned that last week. But that's when the buyers then came back to buy calls and sell puts. So when that call SKEW flattened, people were like, this thing's easily still got upside, and we're going to take advantage of that risk reversal flattening. We're going to sell puts to buy calls. And that took the SKEW back up again. So the spot vol correlation all year has been spot up, vol up. So you generally would expect calls to trade at a premium. So whenever you see that anomaly of it going back down, that's when vol players and spot players all come in and say, okay, we're going to buy the call SKEW because that's been the trade all year, and they continue to believe that. So that's kind of what we think was going on there. The front end SKEW has got to about 5 vols for calls right now, and the back end is about 9 vol for calls. So it does continue to get richer the further we go out, and that's been a steady state for the SKEW curve for a while. Ethereum SKEW was initially more stable. It didn't flatten the way Bitcoin did because it didn't have the profit taking anymore, right? No one was long loads of Ethereum calls and needing to take profit because Ethereum didn't explode to the same extent. But anyway, the call SKEW did kick in, and the call SKEW went very bid, and it stayed very bid, okay? And the explosion higher actually brought short covering in calls, in the money calls generally, but it was basically a sense that the Ethereum move had some room to run, so it didn't make sense for that call SKEW to really flatten the way Bitcoin was. Now, it was a short-lived excursion above Bitcoin call SKEW. So Ethereum's call SKEW was trading above Bitcoin for a little bit, but it didn't last very long. It has now settled back down, and the front end is only a couple of vols in call premium, and the back end is still 8 vols in call premium. So it really is the back end calls in Ethereum that are holding a very, very extreme call premium, which is very similar to what we see in Bitcoin. And I read that as the option market thinking that long-dated Ethereum upside is the better vol to own rather than owning any maturities in 2023. Because it's basically saying that by the long-term expiries, the Bitcoin ETF is a done deal. The focus is then going to then shift to Ethereum, and the massive upside potential that Ethereum has can then kick in. So there's no point, putting your bets in the short end where you might be waiting around for a while. Like the Bitcoin might not even get confirmed this year. So if you're going to have Ethereum bets, it's better to take them in the longer term expiries. So that's what's creating that extreme vol premium on the call side in Ethereum in the longer dates. Now, it's clear that the explosive potential in crypto markets is on the upside, right? We know that that's pretty much been around since crypto was invented, okay? And that's being reflected in the deep call SKEW. But I would say that if any traders have made money on this move and done particularly well and been very long crypto and not hedged it, they may want to layer on some hedges now for year end, because whilst the base case scenario is that the ETFs get approved, and there's a little bit more upside if that happens. If something unexpected was to happen and it kind of throws a spanner in the works and there may be even further delays or something happens that's not expected, then we could get a reasonable move back down, right? Given how much is priced in and what the expectations are. So if you haven't put any hedges in place, I don't think layering on some risk reversals against some crypto holdings is a bad idea right now. It's just a question of how much you want to do. I actually haven't pulled the trigger on that yet. I'm being a little bit sort of opportunistic, let's say, to let this upside move play out a bit. But the first sign of trouble, and if we start to break back down, I will probably be sticking on some bearish risk reversals, right? Because I don't want to catch I've pretty much been long all the way from 28K to up here, which is a 20% rally. If it was to give all that back, I don't want to give all back I don't want to give my entire P&L back on that. So I do think it makes sense. So it's something you guys should think about doing. And if you're not ready to pull the trigger on it, similar to myself right now, it is something that you need to be aware of and be ready to do if spot prices do reject these levels. Okay? So just something to bear in mind. And the risk reversal being deeply for calls means that it's priced very favorably right now to do those sort of trades. All right. That's my thoughts on SKEW. The dashboards are in sell calls for BTC, unsurprisingly, kind of bearish risk reversals for Ethereum, but I do think Ethereum has got some legs still on the upside, so not rushing out to do that. In terms of the flows in the market, explosion in volumes in options. We saw a 75% increase from a week that was already high in Bitcoin, taking volume to $12 billion notional trading on Deribit, which is a record high. In the money calls in 24th of November was sold, taking profit on like the 30 to 34K area. The December calls, any in the money calls in December were rolled up to higher strikes. So you're seeing those big purple bars in the 40K up to kind of 50K area. That was all fresh longs selling in the money stuff to roll up, which is a sensible thing to do. And then as SKEW flattened, as I mentioned, bullish risk reversals were being entered. November 32, 38K bullish riskies. December 30K, 42K structures were being entered into to kind of, get participation in further upside and not really have to pay for it, basically. All right, so that's the sort of trades we've been seeing in Bitcoin. In terms of Ethereum, really dominated by one theme. Volumes were up 90%, so massive spike in volume in Ethereum as well. But the big ones were short covers. So we've been going on about, this big call overwriting flow that's been in Ethereum, supplying vol to the market systematically. Really, that's the biggest reason why Ethereum vol traded sub Bitcoin this year. Now, this overwriter, their positions are very well flagged, and they were in the market buying back options in size, right? They were covering the 1650s, the 1700 calls in the money, buying those back for a loss, okay? And that Vega buying is partly why that area of the curve on Ethereum was actually up on the week. So that's the dominant flow and basically swamped all the other trades. So we did see a few bullish risk reversals entered into in Ethereum, similar to Bitcoin, selling the November 1650 puts to essentially to the person who was buying those back, right? Because it's all vol at the end of the day. Even though they're buying back the calls, the in-the-money calls, that still provides a bid to the out-of-the-money puts. And that vol bid that comes then gets sold into by someone who's willing to sell those puts and use that premium to buy calls. The calls that people were buying were November 1900s and the December 2100s. And those are, not too far out of the money stuff, maybe 30 delta stuff that they're buying, because if Ethereum does catch a rally, that's the sort of stuff that's going to explode and do quite well. So that's what people are doing, opportunistically getting into those bullish riskies and using that big buyer of those in the monies who's cutting risk, using that to sell into, basically. All right, and that big buyer, if that person is cutting risk and not going to sell quite as much Vega going forward, that means a decent chunk of the supply gets taken away from ETH, and that should lead to Ethereum vol recovering. So if we start to see better realized on Ethereum, then don't be surprised that if we see the vol spread flip back to positive Ethereum over, if that supply doesn't keep coming. So that's what we're looking out for. In terms of gamma positioning, still pretty divergent, right? So we've got short position, dealers seem to be short still in Bitcoin. See that below zero down here. Ethereum still small positive. Now, the big short strike for Bitcoin is this Friday, 35K strike. If we were to get a reason to pop above 35K, that is going to fuel a bit of a short squeeze. So be careful of that. You don't want to get yourself too short Bitcoin with this setup here into Friday. And then in terms of Ethereum, really the long position is still concentrated around these 1650 to 1700 strikes in November. We do see some shorts now building on the upside. So really, I think if we break above 1900, that's when the position can actually flip and maybe even go short in Ethereum, and that can help fuel an Ethereum rally towards 2000 and beyond. Okay, so I think that's the setup. At the minute, we're too close to those long strikes on the downside. We do probably need a 100-point rally from here for them to kind of dissipate. And because they're in November as well, it's still 1 month away. But that's what we're going to be looking for, right? If we start to grind higher over the next month, we're going to get into short gamma territory on Ethereum. We might actually start to see Ethereum have some decent movement. All right, that is the positioning setup. That's the summary for this week in crypto. Thanks a lot. As always, I'll catch you guys later.